Hello and welcome to Weekend Investing Daily Bytes. We're shooting episode 193. Today is the end of the week at 11th March. So we're doing a Ask Weekend Investing round. This is the 23rd such episode where we have taken questions from all users through our Telegram channel or through our Twitter channel. And we try to address all the queries that are there. In case we are not being able to pick up your question this time, please send us your question on email and we'll definitely pick it up very soon. Let's first take a look at the market. So after the jump in the markets from the last 2 days, today's market was sort of sideways or waiting for the next Q. Global Qs are still, not clear whether the war is getting over or whether we are going to see more impact of it. Crude has definitely cooled off from a high of $139 to about $110. So that's a good sign. And most markets have had a relief rally. Now it's to be seen whether these relief rallies are actually, V-shaped or U-shaped sort of recoveries, or are they just a flash in the pan as of now. Uh, the pharma space was buzzing today. Pharma has been quiet for a while, uh, especially when markets are dropping. Pharma, IT, and FMCG are the areas where defensive money goes to. And pharma really did very well, and it has done very well this week. In fact, it's the best sector for this week at plus 6.3%. And it has erased all the losses of the month and even 3 months on this. Public sector enterprises are also rallying on the back of positive news about divestment and real estate monetization of many of these PSUs. PSU banks made a slight comeback, but more or less larger part of the market remained flattish and directionless today. In terms of the different indices, small caps were doing very well at 0.9% up. Mid and small cap index also up 0.6%. So the week for the indices have gone by reasonably well. Nifty closing at plus 0.2%. Within the weekend investing small cases, MI25, MI50, MI30, which have small cap flavor, MI35, all were up more than 1%, and the rest were up between 0.5% and 1%. So pretty much all weekend investing strategies were in the green for the week and recovering the losses of the last month or so. So let's come to the Ask Weekend Investing round 23. We have been doing this for a while now, so there are 22 such episodes already in the Weekend Investing Hub. You can go and check them out. There are questions about each and every aspect of the products or the operations which are answered, and there are 300 to 400 queries that are already possibly in there. So you can go to the description below and check these out, or directly go to the Weekend Investing Hub and get access to this. Question 463 is from Vivek. We've had DBs on SGB, but when I compare returns of SGB versus liquid Goldbees through mi-evergreen, it's far apart. Can you please explain how that works? So SGBs, as I've explained many times, are long-term products, best suited for those who can hold them to maturity because they're a bit illiquid compared to the ETFs, and the price discovery on the SGBs is poor because of market inefficiencies. So if you're looking at returns on SGB, compare them from purchase to maturity, and I think you'll get better returns that way. The next one is in NG5050 REbalance, you suggest to bring back the original weights to 50-50. For example, if gold grows to 55% and Nifty declines, we will book partial profit. My question is there any harm instead of booking partial profit, I put in more funds and buy more units instead of? So you could do that. It's basically the whole idea is to remain equivalent in Nifty and gold ETF in that strategy. If you feel that by not doing the rebalance, it will help you from a tax perspective. I think you can go for it. There is no issue about it. Next question, if one is from Gothila, if one is looking for investing in multiples of minimum investing value, post the first lump sum investment, where can you find this minimum investment value? Allcap is closed, it doesn't show. So the safest way is to do in lump sum of 2 lakhs or multiples. Once you invest 2 lakhs, it will definitely take care of the entire portfolio as the max limit is set to 2 lakhs. There is no any other way out other than this right now, but we've asked Smallcase to hold a joint a webinar or seminar soon to clear the doubts about invest more option that they have recently changed. Satya has the next questions. Your daily bites have changed many of our mindset towards the stock market. Thank you, Satya. I'm having a doubt that why we are not getting into metals, which can be good for momentum strategy. So, as you already know, the all the strategies are non-discretionary in nature. So, as and when the strategies will pick up some of these names, they'll come back. And several strategies have metals and commodities already in it. But yes, as they are outperform more and more, they will automatically come into the strategies. Sometimes when the strategies don't have any room for a new entry and the older entries have not gone out because of underperformance, we may miss some of those entries. So that is always possible. Next one is from Teja. PaytmMoney has no integration with Smallcase, but they have integration with WealthDesk. Any plan to launch weekend investing products on this basket? So uh, we are quite happy with our association with Smallcase. There is right now there is no reason for us to, have multiple uh, platforms for the same products, and it becomes logistically very difficult for the manager also to manage different platforms. So uh, I hope PaytmMoney can come to Smallcase someday, and that way those customers can also be served. But pretty much Smallcase is catering to more than 90% of the demat accounts. So from that perspective, a large portion of the market has been covered. Next question from Mr. Teja again. Maxed out 5L investment in MI20, now looking to invest in all cap strategies. Any plan to open MIMT all cap? So, okay, let me say it here. On the Diwali weekend, we will open up all the strategies for all the users to buy any more strategies that they like. I was going to make this announcement later, but since you've asked it now, the Holy weekend, not Diwali, Holy weekend is where we will open up all the strategies for 3 days. So we'll make a formal announcement on this also very soon. Next one is from Mr. Pavan. In recent days, we understood the importance of gold allocation in our equity portfolio as a hedge. Thank you very much. I think a lot of people have discovered this over the last 2, 3 years that I've been constantly badgering you about gold. So I'm very happy whenever somebody tells me that they have a new outlook towards gold as a hedge after hearing from a lot of these daily bites. So question is there any possibility for you guys to relook your weekend investing products to add Goldbees in all strategies? So originally the weekend investing strategies were designed to be, your equity allocation, and then your financial advisor was supposed to do your asset allocation and advise you, 60% to equity, 70% to equity, rest to whatever. So we don't want to get into wealth management for you because our license does not permit that. But as a gradual progression, when people were not really doing this themselves, we did come out with two strategies, NG5050 and mi-evergreen, to make sure that those who don't want to do asset allocation at their own end can do it through this mechanism. So this is what we have right now, and I don't know what future holds for more products on gold, but as of now, these are the ones that are there. Next question is from Tanmay. Is there any way of using the funds parked in Goldbees and Liquidbees for SIPs instead of adding fresh funds? So if you were to use those funds which are sitting in liquid bees as cash component of your portfolio, you are actually altering the proportions of your allocation, equity allocation. So if you've allocated 100 rupees and today only 50% is allocated, so 50 rupees is actually setting out of the market, out of the equity market. And if you were to allocate that back to equity, then the whole idea about coming to cash or going from cash to equity will get lost. So, I mean, you can definitely do something about it on a custom basis at your end, but I would not recommend going away from the equity, from the portfolio strategy as such. Next question is from Zar. Why NNF10 does not allocate to liquid bees during such volatility? Why not prefer silver ETF as a hedge to complement gold? So, so there are two types of momentum investing strategies that are there, which we are using. One is an absolute momentum, which goes to cash, comes back to equity. Another one is rotational or relative momentum, which basically rotates within that sector without going to cash. So NNF10, MI20, MI35, mi-evergreen are such strategies which don't go to cash, and they will go into the defensive part of the underlying sector whenever there is volatility or stocks are underperforming. So it is by design that we are not going to cash. Yes, in very deep crashes they will get hurt more, but also as per design they come back up much faster than the regular absolute momentum strategies. Also, the rollover and the rebalance in these strategies are much smoother in terms of when the absolute momentum strategy is picking up a stock, usually it is breaking out at that point of time. So you are buying, and the rest of the world is also buying at that point. So that really accentuates into more slippages, and not exactly matching with the model returns. But within rotational strategies, you are very very close to the model returns also. So these are the kind of differences. And in terms of silver versus gold, I mean, there is no comparison. It is like, gold has a place in the monetary system. That is why central banks hold gold. ETFs on silver is a very new animal, and silver has not performed as good as gold. Uh, I think if you look back in history, there are bouts where silver will do very really well, but overall, as a monetary sort of hedge, I don't count silver as to be as good as gold. Next one is from Manan. Sir, what is the issue with ATH2 7 months in minus 15% down? Yeah, so some strategies are down more than what we expect. These are specialized strategies, ATH, ATH2, etc., which chase all-time highs. And given the state of the market, many times we will get hurt also in this. So let this not be your core portfolio. These are all strategies to be done as on the side, or as sort of satellite to add to beta whenever you have the chance. So they will perform very well when markets have a structural bull run, but they will not do so well when we have markets in current choppy matters. And 15%, if you compare this to most other strategies out there, 15% is not so bad considering where the market is right now. Next one is from Bhavesh. Alok, when do we expect product for investing in US equity? So I was also expecting a much quicker product start for US equities, but there's a lot of regulatory hurdle when it comes to that, and several people who are doing it without the regulatory clearance. So my sense is that for a research analyst like us to uh, offer research based products, we will need some regulatory clearances, and we are hoping that sometime later in the year we should be able to do this. Next one is from Ravi. Thank you for your daily bytes. They're very helpful. Thank you, Ravi. You've seen many corrections and rallies in your career. How different is the ongoing correction when compared to March 2020 crash? So March 2020 was a very, very deep and sharp crash. This is very, very slow, and I don't think this is showing that kind of capitulation where everybody kind of gives up on the market. Bulls are pretty much money is still pretty much coming in from retail investors also. So this is nowhere near what March 2020 was. So that is the unique part of this correction, that despite the 15% odd fall that we've had, money is still coming in quite robustly from domestic, and that is causing a good support to the market. So a good fall is when kind of everybody's kind of given up on the market and they say that this is never going to come up again. That is the point of sort of capitulation that one should look for if one is looking for that kind of an opportunity, which is once in 5-7 years type of opportunity. Next one is from Savage Indian. Slightly different question. In case we had short-term loss in the current financial year, will we still be able to gain tax advantage in the next financial year if we come under some tax bracket? So this question is ideally suited for a tax professional. But if you have short-term capital gains and you are not and you are carrying that forward to your next year, you should be able to carry it for next 8 years. Is what the tax rule is. Whether it is short-term capital loss or long-term capital loss or business loss in F&O, you can carry them all along for next 8 assessment years. That is the sort of tax angle to it. Next one is from Dr. Mahapatra. While investing in ATH2, should we wait for it to show some upward movement, or should we deploy capital at drawdown as stocks keep churning frequently during drawdown? So as I said in the previous question, this is a very specific strategy that chases all-time highs, and hence it can get choppy when the markets are volatile the way they are right now. But I have no doubt that once the market do come into a singular sort of a bull phase, ATH2 will start performing again very rapidly. And regarding the allocation part, I'm sorry, I'm not at liberty to offer any advice on how you should putting in your money into any products. That is the restriction by my license that I'm bound by. Next one is from Vikash. Instead of gold ETF, why don't you add SGB in mi-evergreen? I wish I could, but given that you have to rebalance every month, and some of it may be coming in and going out, SGBs are not, the bid ask on SGB is not robust enough for a large number of users to get the good rates in terms of buys or sells. If somebody is holding SGBs for maturity, that is a fantastic product, but for some trade to happen every month on it, it is a lousy product from that perspective. So from a gold return perspective, over 8 years, 5 years, that's a fantastic product, but not from a perspective of holding it as a hedge, which may be slightly changed at the end of every month. Next one is from Contrarian. Historical drawdowns shown in one of the drawdown videos is great. It will be great addition to the hub, in my honest opinion. So I'll definitely ask my team to add all the videos to the hub, which we normally do. Maybe we have missed this out. We'll definitely check this. Next one is from King Kong. Could you please have a section for comparison of various weekend strategies with some of the more popular mutual fund products? This will give a fair assessment. I think I've answered this on the Twitter as well. So as a principle, we don't want to compare with any other research provider or asset class, because in some sense we are only competing against the underlying benchmark and ourselves. So I don't want to showcase anybody in any bad light in case we are doing better, or showcase that small cases are better than PMS or mutual fund or AIF or whatever that may be. I definitely don't want to do that. So but all the data is available to you on Weekend Investing Hub. Please do compare at your end if you like, and make a judgment about it. Next one is from Vikash again. Sir, I have recently opted to change broker due to unexplained ways of blocking margin. It is really difficult to find a trustworthy broker. If it is really difficult to find a trustworthy broker, and for each strategy we need separate broker account. So first of all, you don't need separate broker account for each strategy, but if you want to keep them separate, you could put them in different family names or different brokers as you may please to do so. But that is not a requirement, number one. Number two is I don't have any preference for the brokers, but I use Zerodha myself. And I've tried a lot of other brokers. I'm pretty happy with Zerodha, and I'm recommending this without any promotion to them. But that's been my experience. Some others may have had different experiences, but I think all discount brokers, the top 3, 4, 5 discount brokers, are all doing very well. They're pulling in a lot of new accounts, and I'm sure that most of them are having equivalent services when it comes to giving customer support and features on their platform. Next one is from Meghal. You received 572 in dividends from VEDL. When this will be credited? So usually the amounts of dividend get credited to your bank account, which is linked to your Zerodha demat account within 7 days. In case you don't do that, please do connect with your broker, or in case the broker is not able to help, then you will have to connect with the company secretary or the registrar of the company in case you don't get the dividend. Next one is from Vikash. SGB worksheet is very helpful in deciding the best SGB to buy. If possible, can SGB worksheet list all the series with live tracking prices? SGB on NSE site has series listed. I was hoping that somebody out of the 188,000 people who are watching this SGB discussion on Twitter would offer a list of all SGBs and reduce my burden to make this list. So in case somebody can make it, it will be a big help for me as well as for your fellow users. But in case nobody comes up, I will definitely try to make it in the coming months. So thank you so much for watching. This is the end of this Weekend Investing round 23 of Ask Weekend Investing. And I hope all the queries have been resolved to your satisfaction. If not, please do send us mail at support@weekendinvesting.com and we'll be happy to respond to you immediately. Thank you. Bye.